Hey guys, and welcome back to the channel. If you're new here, thanks for stopping by. Hit that subscribe button because these videos build upon each of the previous videos. Today, we're looking at the strikes from Iran into Israel, what effect that has had on the markets, Bitcoin, the stock markets, and real estate, and what you can do about it right now. It's down, well, Bitcoin is down nearly 10% in the last 4 days, basically wiping out all of the gains of the last 2 weeks. So what are you going to do about it? Are you going to be freaked out and stuck like a kangaroo in the headlights, waiting for another sign that things are okay? Or are you going to act now? Let's look at that in today's video. Make sure you hit that like button. It does go a long way to helping out the channel. It's your home of macro cycle analysis with me, Jason Pizzino. As I said, we're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, let's kick it off. We've got our agenda, but in this case, the narratives to have a look at in today's video. Obviously, the big one today is the missiles that have been sent from Iran into Israel and what the retaliation is going to be from that point. Some very interesting time perspectives around this incident. Now, as I've got here, the narratives are building for a blow off top. This has been my thesis forever on the channel. There are going to be corrections in the market like we saw with March and the correction down into August, and obviously September had also the higher low as well. So it's not going to be a straight up line, and it's going to be quite volatile along the way. And I've said many times before, in particular in this video here for October, the volatility is going to increase throughout this last stage of the cycle. As the markets head up, it's going to be more and more volatile. And if you're not watching a chart, it's going to be even trickier to follow what's going on, because the news headlines are going to tell us one thing and the charts are going to tell us something else. The headlines: world reacts to Iran's missile attacks on Israel. The Israeli military said a large number of missiles have been intercepted. So the good thing is that Israel was able to intercept these missiles, and so far, at least from the reports, it doesn't seem like too much damage has been had. However, it obviously has damaged the relations over there, and things seem to be escalating, which I guess is why people are freaking out about the markets right now. Just 2 days ago, we were looking at the October analysis, this video right here, the October update. Heaps in there. I know it's quite long, but there's a lot of data in that particular video. And literally on this post where I posted the video, I said, October is historically a volatile period for the markets, especially in an election year, and we are 5 weeks out from an election. What narrative could scare investors this time? I'm sure we'll find out after the fact, but the charts and data will let us know before. Well, literally 2 days ago, what narrative could scare investors this time? Iranian missiles enter the chat. Essentially, we don't know what is going to happen in terms of the news headlines, but we do know there was going to be volatility in the markets, and we definitely saw that. We do know that these events happen kind of on a cyclical basis, not saying that the missiles are going to be thrown every 6 months. I'm just saying that there are particular events that occur in a timely fashion. Not saying that it has to be missiles, but you get these big emotions around similar times in the market time and time again. And the longer you study them for, the more you'll see how often they happen. Middle East conflict. Today, Middle East conflict in April. We had that one as well. It was Iraq into Israel. And then Middle East conflict in October 2023. There was also more going on with Israel. There was another attack on their holy day weekend. So that was basically the first week of October. So here are those days in the market. That is October of 2023. The best time if you missed out on the 2023 and 2022 lows. That was the best time in the market to be getting into the market. We have to separate the emotions now when it comes to what's going on with these missiles and investing. Investing doesn't want your emotions. The emotions are left for other times. Maybe talk about it with your family, your friends, at work to go and waste some time. Or, if you do have family involved, that's even worse, right? So there are times to be talking about that. But when we're talking about markets, different story. Middle East conflict, there is April. Best time. Now, I'm not saying that this move to the downside is over, but if things are running similarly, they're rhyming, I would say that this is going to be yet another higher low in the market. You take your choice of where you want to get in, whether that's now, whether you wait a day or two, whether you look for your signal of the market putting in a low and then breaking out. It's entirely up to you. But the main thing that I want to point out here, yet again is, I would say that this is another higher low being formed in the market along this macro bull market to the end of the 14 years up, and then we get that roughly 4 years down for the 18-year cycle. These other things I talked about on Monday. October volatility. Well, we only took a day and we got that 4 to 5 week volume fill. So remember, we were looking at these moves of low volume to the upside. You can see underneath the average volume here, this bit of a move. And typically, that whole process lasts about 4 to 5 weeks, where this low volume begins and the market basically fills in that low volume with added volume. And I gave examples going back throughout 2024, like you can see here, the low volume on the incline, on the uptrend, and then the increased volume to come back and fill that low volume of the uptrend. It seems like we are doing that again in a short period of time. Maybe that's going to be roughly 4 to 5 weeks yet again, and that could last, would be a good time frame leading into the election. So maybe we get those lows coming into October, as we also looked at. Now, just before I get to those lows, I'm looking at those charts that are telling us the worst is here and all that sort of jazz. October 1st, red day, means quarter 4 green. Looking at that data, if October 1st was red, it had to be 1%, and it was on the SPX. We only got negative 0.93%, so just short of the negative 1% for the day. What that has shown over the last 70 odd years, remembering the data from yesterday, is that quarter 4 would be green. So pretty interesting one there. It only happens about 10% of the time that you get October 1st being negative 1%, and then there was a 100% chance. I don't like the full 100% guarantees, but basically the data has shown that quarter 4 will be green. I'm trying to stress the point that while we're in a macro bull market, each of these seemingly terrible World War III or any type of event like that seems like it should take the markets down and collapse and recession, depression begins. It's more likely going to be a wall of worry, higher low. So basically a buy the dip opportunity. So that's the S&P 500. There's basically been no signs here that this is going to lead to a collapse. On the missiles getting sent, it wasn't even able to break back below this low here. Not saying that the correction is over. Plenty of support levels to the downside. You've got the September lows. You've got the yen carry trade low of August. You've got the previous old all-time highs. You've got lots of lows here. Even April, the other Middle East conflict low of April 2024. So the charts here, looking at what happens with October. Quick recap, because I did cover this. Bit of a trend into a low roughly around these dates, just so we can remember the dates here, about the 9th, 10th of October. So basically next week. That doesn't mean it's going to be straight down to next week. You can see in the dotted line here, the election years. The market movement could be a day down, could be a bit of a bounce, another day down, day down, day down, day down. Then you got a bounce, couple of bounces here, down, bounce, down, bounce. You get the idea, right? And then into another low later in the month, probably the third or fourth week of October. Okay, so keep that in mind as we progress throughout October. And once October is done, significant drop, significant drop. And remember, we did have this pretty big news item over the last 24 hours. This drop could be a little earlier, and then you get those couple earlier. I'm just looking at the pattern here. That's October for the S&P 500 average path in all years since 1950, when returns through to quarter 3 is greater than or equal to 20%. November, December, pretty good run out of those lows. It's not a straight up line, plenty of corrections along the way of 0.5%, 1%, but overall that November to December, about 2.5%, and then another 2.5% after October, drops off about 2.5%. On top of that, volatility index also suggests that there will be more volatility in October. All years, 21 out of 33 times we've seen significant volatility in October, and 6 out of 8 of those, there have been 8 election years throughout the data that we've got here, 75% of the time you see those being quite volatile as well. And what I'm classing as volatile are essentially major peaks in the volatility. There is a tick, there is a major peak. You can see the few months prior to it, you had low volatility in our bull market range, 17 to 11 here, and then you get these peaks for October that take out some of those tops or test some of those tops as well. So that has shown up many, many times in the past. So while October is still underneath September and most likely will remain under August, there might not be a volatile reading showing up on the VIX because of what's happened previously, but nonetheless, living through it, you will know that this has been a volatile time. And I mean, we only have to go back to the last 24 hours where the missiles have been shot over to Israel, and you see that come up on the chart. There's just been some volatility in the markets. Now that to me is presenting a fantastic opportunity for investing, not for the lives of people that are in the middle of the war zone, of course, but just looking at the market returns here as I move myself out of the way at the bottom. Bitcoin and 2024 has been the best opportunity. So far, 100% of assets are up. And this is brought to us by Charlie here. Basically, just looking at where could you invest your money. So if you've got these opportunities to get into the market, then choose the areas that are going to give you the best returns, especially in a macro bull market. 2024 looks like it is still shaping up to be a macro bull market. Just taking a look back to 2021, you've got 13 years here. Generally, you don't see a red year and then another red year. We saw that in the early 2000s, led after the tech wreck, but it doesn't happen very often in the markets, and I don't think it's time for one of those just yet. We are not in the classes of 2000, 2001, 2002. It's not the same sort of times where you would see such a significant correction. Remember, we did have a very big 2023, and I think it's likely we're going to see another pretty good year in 2024 until we get to 2025. And that's when you can start worrying after that period of time. So very, very good returns here for Bitcoin. So what does that look like in the market in terms of market sentiment? Here it is, 42 on the fear and greed index after yesterday's missile attacks. As for the fear and greed reading, this is a fantastic opportunity. I think it's a very, very good time and really good to see the market resetting with these fearful times and higher prices. So basically the higher lows that are forming. Bitcoin has dropped to 60K, giving us that nearly 10% drop, but the support levels underneath are still intact. Even after a very significant move in August, the support levels were still being held up. They were held up at the 50% at 49K. It held up above the ETF top. It held up above the bull market support level of 44K. That was the August yen carry trade fear that spread across the entire market. And on that day, it closed above the July low. So that's a really good short-term signal to suggest that we would see a bounce or at least some steadiness and price support at that level. It needed to get back above 56, and so far Bitcoin has done everything to do that. It pushed again after that correction in September, tested the 56, and now has put in an overbalance in time of price. So this is a nice, strong signal that we want to see. These sorts of days in August, and nothing that I'm trying to predict in the market, I'm just looking at times where you can see good opportunities for entering in a range and then watching and riding the trend up, and then look for times to get out of the market, whether you scale out of part of the position, whether you scale out of all the position, entirely up to you. But we talked about this on the channel, the TIA bearish signal here, the 3 days down that occurred at that peak, which told us it's probably unlikely that we're going to see higher prices. And that's exactly what has continued to play out here. We're now 200 into our 202nd day underneath the old all-time high. Let's have a look at the weekly chart. Now, we've seen multiple dips to 59K. I think there are pretty good opportunities. If you get any opportunity under sort of 58 to 60K, could be some good buying. Underneath 56K, things get a little bit dicier, especially if you see closes, at least weekly closes under that level. That could spell a little bit more of a disaster. I think that's important to note because obviously that's around the invalidation levels of any sort of uptrend. For now, we've at least seen a weekly swing break. There is your top from August, and we finally got a break in that. So higher highs, higher lows are forming for now. The Bitcoin price has been underneath the $74,000 top now for 29 weeks. The previous timeframes before a breakout are basically around this period here. So if we don't start to see a breakout over the coming weeks, this could either A, be the longest consolidation period before a breakout, or B, it could be invalidated and the price goes down. You probably know my view from this point, I still see further upside, even if this ends up being one of the longest consolidation patterns and periods throughout Bitcoin's history. As we've got here, 29 weeks from that top, currently in this particular week here. If things turn around rather quickly and we get a breakout over October, then that's where the reading would stop. But if we have a look back in history, 15 weeks from July top to the breakout in October, so that was just that little range there, but overall you had this 6 to 7 month consolidating pattern before the breakout. So if you want to have a look at it going all the way back to the first top, that's about 28 weeks, which is basically in alignment with all other periods throughout the Bitcoin's history. Roughly 30 weeks from the top in August to the breakout in March. So nice easy pattern there. 27 weeks from April top to where it tested that top again and then collapsed from that point. So that was the end of the cycle. So again, 27 weeks, 28 weeks, 30 weeks. Going to have a look back in 2016 and 15, 29 weeks. You've got a peak and then consolidation before a breakout, another peak, consolidation and a breakout. The big point to note here, and sending it to you guys who have been watching the videos for some time and getting to this stage in the video itself, look at how long the consolidation happens and how long the move is on its own. 4 weeks. And then you had to wait another 6 months before you get another break. And then it comes back to that point where you would get in and you have to wait again for several weeks until the move resumes. And the last one here is about 60 weeks, so 58. So basically a double of what we've seen in the previous moves themselves, 27, 28, 29, 30, a doubling of that. So you're just looking for patterns repeating here. There is your top, and this is where you get the first close, highest close above that level there. So the highest closes were around 11K, and then it took all the way until August. 58 weeks later, you get a close there at nearly $12,000. Now, time frame from that top until the breakout was about 71 weeks until you get this breakout here. So that was October of 2020, almost exactly 4 years ago. So maybe we're in the midst of something else like that. Overall, all I can see is similar patterns playing out where you have a time frame of consolidation before you get to some significant breakout. And that essentially tells you what the market is like. That's what people can handle in cryptocurrency or Bitcoin until you start to see these bigger moves. And in terms of the moves, they don't really last that long. If I look at it here, you basically had another few weeks up and then the pattern went sideways. The biggest move we've had recently has been October 23 into March 24. There were several weeks up, of course, with 8 or so weeks of more consolidation before you just have 1, 2, 3, 4, 5, 6 weeks into a peak. So basically it's a very short time of a move until the market goes sideways again. Look at it here. October, the breakout 1, 2, 3, 4, 5, 6, 7, and then basically it was sideways throughout December, January, and then it started to go again in February. So you had to wait around again for 2 months after about a 6-7 week move to the upside. 2021 looks like a very long move to that peak in April. So there's several months there, but along the way, you still had pauses. 1, 2, 3 weeks before the market took off again for 1, 2, 3, 4 weeks. Then you had a pause here, 1, 2, 3, 4. That was highly volatile, 30-odd% move to the downside. And then you had the move again. The breakout, 1, 2 weeks, correction, holding pattern here, and then a breakout, and then basically it didn't go anywhere for that period. So what I am stressing is once this thing breaks out, in almost all cases for BTC, you get several weeks, 3 to 6 weeks. Within that, you could get periods where it doesn't go anywhere. So if you miss the break, you basically miss the move. So all this time, all this pain of 6 months, 7 months of sideways and emotions to the downside and upside and thinking it's going to break down more, all of your time and effort can be wiped out if you miss opportunities possibly like this. Of course, have invalidation levels to the downside just in case it doesn't work out, but essentially waiting until things are rosy and people are all thinking that the bull market is back on, it might be at your peril because you have a few weeks until it goes sideways at that point. Things can keep going from there, but it does get very tricky to play the game in a bull market. As for the total cryptocurrency market cap, excluding Bitcoin, ETH, and the stable coins, so we've got a true representation here. It's still above 400 billion. Nice quick flush out at the moment. It looks like a bit of a panic dump. It still has been rejected at 480. So there's a couple of overhead resistance points which are going to be key to this next stage for altcoins around that 480 to 500 billion mark. Obviously, you can see these tops here, and that is your 50% level from the August low to the March top, cut through the middle, 480. So looking for a close and consolidation above 480 to 500 billion here for the total cryptocurrency market cap, excluding Bitcoin, ETH, and stable coins using this particular indicator right here. So what does that look like for ETH and Solana? Well, ETH is being an absolute pain in the ass and showing more and more weakness, closing under 50% levels, closing under daily swing tops. Essentially, it really doesn't want to move at this point in time. It has to get back above $2,800 to $2,900. There are those current tops there. You can see 2750, you can see 28, and all these lows here at roughly around 2850. A lot of overhead resistance. It's still just putting in a few higher lows on the daily chart, but overall is quite weak compared to some of the other altcoins in the space. For the strength, it's got to get back above there and begin its next campaign from 2,800 bucks. As for Solana, also showing some short-term signs of weakness here, closing underneath 50% at $152. Possible triple top in play here. The triple top are around $160, $162. If this is to play out and break down from about 138, then you could look to around 120, 109, possibly. If there is some sort of freak news event for Solana, possibly $98, $99. Let's reserve that until we see any sort of breakdown of about 137, 138, and then down to 120. These are the resistance levels from the double top. So extending that down to 50%, 100%, and 150%. I can hear it now. Many people are either licking their lips at cheaper SOL, or those who are a little bit emotionally attached to their tokens are saying it's impossible for it to get this low. Maybe it is. I don't care. The main point is that I'm watching these levels. If this breaks down, then there is more chance that it's going to break to the next level. So just keep those levels in mind. I'm not saying it has to get here, but they are the probabilities. So that's a look at Solana, ETH, the total cryptocurrency market cap, and Bitcoin. The last one here is from Michael's video recently, just looking at Q3 of Bitcoin and the total cryptocurrency market caps here. Bitcoin closed in the green. This essentially means on the quarter that it is unlikely we're going to see bigger downside. So to reiterate the point of the video, especially after some of these big news headlines, it seems unlikely, but not impossible, that this is a good buy the dip opportunity for longer term outlooks. If you've got a trading time horizon of 6 to 12 months, say that's April to October of next year, basically in 2025, what are you going to be doing in October 2024, knowing everything that we've gone through in this chart? Is the worst actually here? Is it almost over? And are we going to see some good signs later on? I want to hear from you in the comments section. I'll leave it there. Like and subscribe if you haven't already. And I'll see you guys back here on the channel for the next installment of the everything bubble, the macro cycle heading to new all-time highs. Thanks again, guys. Until next one, take care and peace out.